Hello, my name is Vulcan. I understand that because of the continued updates and upgrades of the spreadsheet, you now require more in-depth examples on how to use the spreadsheet. Okay, let's explore some examples on how to use the spreadsheet. After this video, you should be able to utilize the sheet more accurately. Okay, starting with the pulse wave buy signal. You will be able to locate the buy signal under the pulse wave buy column. When there is a pulse wave buy signal, you will have a positive reading of 1 under the pulse wave buy column. With a positive reading of 1.00 under the pulse wave buy column, you can place your buy stop limit order at the pulse wave resistance price trigger. This is what is referred to as an aggressive entry. An aggressive entry is when you buy the initial pulse wave buy signal without a corresponding swing trade buy signal. When you have a corresponding swing trade buy signal along with a pulse wave buy signal, this is referred to as a confirmation buy signal. When the pulse wave resistance trigger is less than the pulse wave breakout trigger and you have a pulse wave buy signal along with a swing trade buy signal, this constitutes a confirmation buy signal. An aggressive entry on an initial pulse wave buy signal can net you more profits. However, you might get triggered early and have to sit through an initial drawdown period. Since the system normally leads the markets 3 to 5 days out, it is not uncommon to stay in a trade for 2 to 3 weeks on average. Regardless of which signal you decide to take, you should always be prepared to hold the position overnight. This is true even on intraday signals referred to as day trades. Always remember to trade with a stop loss. This will help to protect you from unnecessary substantial loss. There is substantial risk of loss in trading futures, stocks, and Forex. Therefore, using stop losses is critical. Failure to use a protective stop loss is foolish, stupid, and just plain dumb. You're a complete idiot if you do not use protective stop losses. I repeat, don't be an idiot. Idiots don't use stops. So don't be stupid, use sound money management at all times. You must always protect your principal. Only use risk capital when trading. By risk capital, I mean money that you can afford to lose. It should not affect your lifestyle if you lost it. Never trade with money that you cannot afford to lose. Okay, let's get back to understanding how to use the spreadsheet. You will notice that many new features have been installed. The sheet has been updated with a drop-down menu for each column along with a new user guide tab. There is also a FAQ sheet along with questions and answer guide. All of these new features have been developed to help guide you to becoming a better trader. Now let us focus on the different sections of the spreadsheet. We have just finished discussing the pulse wave signal. This is your primary signal. We will now focus on the secondary signal of the system. This is what we refer to as the pulse wave breakout or swing trade entry. The swing trade entry is also referred to as a continuation as well. A continuation signal is primarily a signal that is generated after an initial pulse wave breakout. Swing trade are generally where you would be looking to add to your open positions. It is also not uncommon to have all 3 signals at once. Again, the system generates 3 types of signals. There are 3 signals that the spreadsheet generates. We have now covered the first 2 signals. The first being the primary pulse wave buy signal. The second signal we discussed was the pulse wave breakout signal referred to as the swing trade signal. We will now discuss the third and final signal called the 2-bar Charlie. The 2-bar Charlie is your intraday or day trade signal. It is important to keep in mind that day trade signals can turn into swing trade signals, and swing trade signals can turn into pulse waves. You should always be prepared to hold any and all positions overnight. The 2-bar Charlie buy signal allows you two separate possible entries. The first is the 2-bar Charlie resistance and the second is the resistance high. So if the market gaps up above the first trigger price, then you simply go to the secondary entry. That's it. Now you have it. Be encouraged and good luck.